Thanks very much, Jacob, and a big thank you to Red Cloud. We're huge fans, and these guys and gals have stuck with us. I mean, especially the precious metals industry through some tough times, so hats off to the organization. They've been great supporters. So and just to give you a little bit of history, go back to 2015 when we were at $1,057 gold price. And our company was under a lot of pressure because our all-in sustaining costs were basically about the same as the gold price. And our stock price got as low as $1.50 Canadian. We were under a lot of cost pressures. And previous to that, we had started a very rigorous program of cutting our costs. We were one of the first out of the gate because we had to be, given our cost structure. And we had a lot of success with that. We also combined that with what I call short cycle economics and focusing on near mine exploration and leveraging off our current infrastructure. So in 2016, we were actually the top performer in the gold index. 2017, we were number 3. So we had about 3 years of very, very high performance. And then 2018, we started to see the winds changing quite a bit operationally. We had challenges at Roosevelt in the third quarter. And then at the end of 2018, Westwood had another seismic event which hit one of our core producing areas and caused us to revise our guidance downwards. We also noticed that the number of active managers in the space was dwindling, a lot more passive involvement. And over this last year, have certainly seen the fact that investors are not interested in seeing any kind of equity issuances to support capital. So I guess it was about a year ago that I looked at the concept of us going to what I call the pure self-funding model, where we would make a commitment to investors to preserve our cash position, which is around $650 million US right now. It will be growing by $170 million by the end of the year with our prepay. So we'll be sitting at around $820 to $850. But I wanted to make sure that we preserved our cash and that from an operating and corporate standpoint, that we were able to fund everything from internally generated cash flow, and then hopefully also add to our cash position as we went through that. So we went through a full review of all our costs. We did another major cost reduction. We cut 35% of our workforce at Westwood. We cut our workforce at Essakane. We cut it in Roosevelt. We also reduced our expenditures in Toronto. And I'm pleased to say that we've turned the corner and that we are seeing our cash positions increase, that our margins are much stronger than they were a year ago. And although we've had some challenges at Roosevelt that you've heard about, I just got back from Roosevelt about 2 days ago. We're seeing Roosevelt turn around, Essakane's running quite well, and Westwood is ramping back up. So a very good move by our operational and corporate people to get us back on track. As you know, we're very diversified geographically with mines in West Africa, South America, and North America. Major mine being in Burkina Faso with Essakane, Roosevelt, and Suriname, producing mine at Westwood. And then we have some very large and attractive exploration properties in Ontario with Côté. Also in Quebec with Nelligan and Monster Lake. We also have exploration opportunities in Latin America with the Eastern Barassi, Pitangui in South America. We've also seen some very significant success in and around our concession in Burkina Faso. Our balance sheet is something that since day one, it's now 9 years that I've been at the helm. And I come from a background where we never run out of cash. We always make sure that we have lots of cash. And you can see from the balance sheet and our liquidity that we do have lots of liquidity. We have a debt payment in 2025, 400 million US, and we're in a very good position to repay that without any issues. So, what are we going to do strategically? I would tell you that we've been sent very strong messages from our shareholders that they're not interested in large capital expenditures. Our Côté project, which sits at about a 70-30 split right now between us and Sumitomo, will not be moving ahead in its current form. Either we need to sell down Côté to a lower percentage to get the funding. Excuse me, I got a cold when I was in Suriname. Or look at Côté as an asset for sale entirely. Our desire would be the former. We'd sell Côté down to see if we could manage a more digestible capital program. But right now our shareholders are not interested in that large capital program. So where we're standing, Boto makes the most logical sense. It's about a $250 million project. It drives about 180,000 ounces a year when it starts up. It's got about a 13-year mine life. It's very attractive economics. We also have some great opportunities in Quebec, Monster Lake, Nelligan, that are again much more digestible. So when you're thinking about the strategy in front of IAMGOLD, let's get debottlenecking at Essakane completed to make the mine more efficient. Let's get Rosebel up and running to where we think it can be. Saramacca adding new fresh opportunities in terms of higher grade and softer rock. Let's get Boto on the screen to make sure that we can move ahead with Boto, reduce our cost base, and add to our production. That basically is the strategy that we have in front of us. Maintain our cash position. We will have to spend money on Boto, but again, given that we're generating positive cash flow, we hope to build that position back up again. We've had some great success in terms of increasing our reserve base. You can see that on the screen. We've moved it up a whopping 129%. We've had some great success in and around Rosebel, in and around Essakane, and certainly at Côté. One of the areas that we spend a lot of time on is the environmental, social, and governance areas. Award-winning, we've been always out in front of this from day one. As part of our DNA, we have some great projects, the solar project in Burkina Faso, the solar project in Rosebel, the work that we do in Burkina Faso around the water project. Oh, thanks, Robert. No problem. Yeah, I got an air conditioning cold down in Suriname, so I apologize for my voice. We're also very involved in Canada with the Laurentian University, and with the Côté project, we have signed the IBA, so we're quite pleased with that. We will continue to put the emphasis that we need to on the ESG. I know it's become more and more prominent. We have more and more investors who look for us to spend money and to spend time on this. And as I say, we've done that since day one. So back to near-term catalysts. The company, as I said, is in very good shape financially. We're going to be receiving another $170 million into our coffers from the gold prepay. Diaka Sarabaya, which is in Mali, right across from our Boto exploration success, will be announced, or has been announced this year. And then when we look at the second half, we're looking at, we're going to start production at Saramacca. We'll be moving ore November 1st by truck, a longer route until the haulage road is complete. And that we expect to be in the first quarter of 2020. Nelligan initial resource will be announced, and we'll have a Westwood update by the end of the year. And then in 2020, we expect to have addressed the Saramacca road construction and have Saramacca completely linked in. The Essakane debottlenecking will be complete. So lots of near-term catalysts to get things going for us. I'm very, very pleased, as I said earlier, with the progress that we've been able to make at the operational level. Our fourth quarter should be quite strong, and then we're looking to 2020 to see us back on track. So as the case is in most mining operations, you get some bumps in the road. We had about 3 years of very strong sailing, and then we ran into a few bumps that we needed to work out this last year. But I can tell you that we've made some significant progress, and you'll see that in our results. So we are big believers in leveraging the existing asset base. The solar farm that we have at Essakane as an example, we're looking to double the size of that. At Roosevelt, we have a very, very strong mine there that's going to grow. And one of the most attractive features of this, and I would point it out to you if I could get there, is the fact if you look down to the southwest, you see Saramacca, Brokolonko, Serafina. We know that there's around 2 million ounces of reserves at Saramacca. As we extend along that anomaly, we feel quite confident that there's another 2 million ounces. We'll have a haul road complete by the end of the first quarter to feed our mill, which was paid for a number of years ago. And so the economics at Roosevelt are going to improve quite dramatically over the next couple of years. We're also seeing some great exploration success north of the mill, and we do have work to do with the communities. You saw that when we had to stop our mining operations about 6 weeks ago. I've been down to Roosevelt 4 times in the last 5 weeks. We've got a very strong relationship with the president and the government there. We also have a very strong relationship with the new Coffee Camp Village, which is on our concession, or just off our concession. That work is moving along very well. It's a constant work in progress, but I can tell you that our mining operations are back up and running, and we feel much more comfortable about the direction going forward. So we spend a lot of time on these relationships. We spend a lot of time consolidating our gold districts in each of the areas. And we spend a lot of time making sure that the communities' concerns are addressed. So you can see the road. I did a tour of that when I was there in the last visit. It's moving along quite nicely. Right now, as I said earlier, our schedule is to have it completed by the end of the first quarter. At Essakane, we're moving ahead to do further regional exploration. We're seeing some great success at Gossi, at Corazina. We're seeing some really nice hits in and around the mill, not far from the mill, anywhere from 6 kilometers to 11 kilometers. As you know, we had some great success at Falamguntu, which was just about 8 kilometers to the east of our mill. So Essakane continues to throw off some significant cash flow. It continues to grow. The life of mine continues to be extended. And one of the things that's been a great success for the company is that this company, when I joined, had a mine life that was out to about 2018, 2019. But with the exploration success that we've had and the commitment from our operations people, it's north of 2030 now. So lots of great success. The company is in very good shape from a reserve standpoint. And again, these are reserves that are near our mill, near our infrastructure, so the cost of tying it in is quite low. Westwood, this has been a challenge for us. We thought we had Westwood back up and running after the incident that we had in 2015. A number of you in the room were probably on the mine tour post that event where we felt that we had it resolved. The confidence in Westwood has been shaken and with our shareholders. There's obvious reason for that. We've changed out the entire management team there. We've put in a new technical team. It's being led by Sylvain Collard, who's been with our company for some time. Young individual. We brought in technical expertise from Australia, and people that have had experience in the seismicity area in mines similar to Westwood. So we are going to see Westwood continue to ramp up. We're going to see a new life of mine, which will be produced by the end of the year and published. We'll hold an investor day to go through Westwood specifically because it needs to be addressed. So news at 11 on Westwood, but again, all the reports that we're seeing, and we watch it consistently, is that we believe Westwood will be a long life asset for us and bring lots of economic value to the company with about 3.5 to 4 million ounces of recoverable gold. We have a great pipeline, and again, 9 years ago, this didn't even exist, but we have, we've seen some great results with Falanguntu, as I mentioned. We've got Côté, which is on the shelf right now, until we can make some of the changes that I talked about. Bodo, Saramacca will move ahead very quickly. Bodo will be next. Sadiola is a work in progress. We may end up disposing of Sadiola if we can't see any progress with the government to move it ahead. And behind that, we have some great opportunities with Monster Lake, Yorgo, which is a satellite which would help Westwood's performance. And I won't go through all of them, but you can see that when you look at the list, there's lots of opportunity. And we're going to use, as I said earlier, a self-funding model to, excuse me, to provide the capital for the pipeline. So our vision is to create this superior value and basically move towards a self-funding model that we think will allow us to move ahead in the future. Because right now, as most of you know, finding outside capital to fund this is a huge challenge. So I'm happy to take any questions if there are any.
Steve, down here, the Monster Lake target and Nelson target.
I can't hear you, Robert. Sorry.
The Monster in town, Monster Lake and Nelson, most high grade and it's lower grade.
Right.
Given the outlook of the gold price, you decided which way you want to push hard.
Probably Nelligan first, then Monster Lake. I think that makes the most sense.
And how much more work is going to go on in Nelson?
Not a lot more. I mean, we're pretty happy with what we're seeing, so we have very high confidence that the two of those deposits we can basically consolidate into a mine. Looks very attractive. Yes? Yes. Yeah. Yes.
Côté Lake, very large land position. Talk about selling down, sell down.
Well, here's the dilemma. Côté is about 12 million ounces, lower grade, a gram a ton, bulk tonnage, but very concentrated. So it's got a very nice look to it. 9 years ago, if gold was at $1,500, Côté would be moving ahead at warp speed. But we've had some challenges, as you know, in the industry with these bulk tonnage opportunities. And for a company our size, we're about 1.8 billion US market cap. To proceed with a project that's about 1.2 billion gross, our share would be about 850 million, just doesn't go over well with our shareholders. They see it as too risky. If the gold price falls back down to 1,100, our AISC is high relative to others. We wouldn't be generating a lot of cash flow, so we drain our cash position which is one of the things that makes us attractive. So Sumitomo would like to move ahead with Cote yesterday, and they're very high on it. They're very disciplined, they're a great company, $9 billion US company out of Tokyo. And if they could, they would move ahead with Cote now. They're disappointed that we haven't. But we listen to our shareholders, and I'm constantly talking to them. They just don't feel it's the right way to go. So their suggestion would be sell it down 20%, which would be sell down the basic ownership in all of that land by 20%. Use the proceeds to boost your balance sheet, and then maybe look at it. Or, if you can't do that, sell it all and pay your debt off. But they are not at all interested in moving ahead with that larger project given our market cap. That's where we are. And if there's one thing I do is listen to our shareholders. I talk to them literally every day. They're happy with where we're going with the company. They would be very unhappy if we moved ahead with Cote today. In fact, I doubt if I'd be standing up here. Okay, thank you very much.